All right, let's jump into things. 10:46 on the 20th of May. Pretty quiet sort of start to the week news-wise and sort of data-wise. We did have a little bit of sort of China data out yesterday. Obviously, industrial production sort of ticked up a little bit there, but then it's also balanced out with retail sales down a little bit. So, look, not really a great deal to sort of take away from it. Yeah, I mean, if we look at the yuan from the reactions of these sort of things, still pretty flat. I think the industrial production, I think, works a little bit better. Well, at least Aussie was responding a little bit better to it yesterday. Sort of particularly even sort of through, maybe not so much through Asia, obviously, sort of when this sort of data came out, but certainly picked up a little bit. Well, picked up a lot actually, moved over 1% from the low of the day to the high. Um, Off the back of probably a little bit of the starter, but mainly sort of USD sort of weakness moving through there. But moving on to today, there wasn't really yet much else overnight. A couple of Fed speakers. I think Trump was talking as well, or Trump actually had a chat with Putin. So as far as I've sort of seen with that, it seems to be that like talk went well. Yeah, I mean, Trump will always sort of say that the talk went well. But yeah, they spoke well, and then the Ukraine situation back on the cards for starting talks for resolutions as soon as possible. Take it with a grain of salt because we've heard it a number of times, and you know what I mean. It's Putin's almost just seems one of these people that sort of like, yeah, to your face, yeah, yeah, cool, we want to do the right thing, do the right thing. As soon as the doors are closed, he's like, "Pfft, I'm not doing that." And yeah, we saw that last week. He just didn't turn up to whatever that meeting was in a meeting in Turkey. So yeah, we'll see if there's any sort of real sort of follow through with that. In terms of sort of like risk proxy with this sort of stuff, market, it could be part of the reason that Aussie moved a little bit. Maybe I don't think so. I think it was more just US dollar weakness and that based off the Moody stuff from the weekend. But you know, if you look at them, maybe gold didn't really sort of move a great deal. Sort of in relation to that stuff as well, like particularly as those sort of phone calls and all the headlines and that kind of stuff were coming out, mainly flat and a little bit cooler at the moment. I mean, if it were to be affected, it would go to the cooler side of stuff. But as I've said a couple of times, I don't think that's the thing that the gold market's looking at the moment as a catalyst to drive or sort of cool off and that. I think it's still certainly more the trade war stuff that's sort of going on, which is going to be the catalyst for that. So look, it is a tick in that kind of sort of side of cooler side of stuff, but as I said, I don't think it's going to be a major impact. And we're going to see, oh, Ukraine and Russia have a big, peace agreement and that, and gold falls $100. I just don't think it'll react like that. Um, so that was about it overnight. Obviously, sort of coming up today, we got a little bit of China data, but pretty flat. Look, a little bit sort of cooling in the 1 year and 5 year rates, and then the bigger one for the session is obviously RBA at 230. Sort of widely tipped to sort of drop 25 base point, which is the same cut that we had sort of start of the year, since we had a couple of holds. There's a couple of outliers. I think NAB is saying sort of 50%. There's a couple of sort of economists sort of saying sort of, oh no, no, they're going to hold. Look, there's always going to be sort of different shots of people. Generally, more recently, as I said the other day, I think they've been pretty on the ball, and I think they've actually been sort of calling it pretty well. Um, with the sort of cash rate, there hasn't really been too many shocks recently, so I don't think NAB's right. I don't think we're going to get that 50 base point cut. I think the data is too strong. I mean, we had 80,000 jobs added the other 80,000 jobs added the other day. Unemployment rate hasn't risen. You know what I mean? It's those kind of things you got to think. So like that's strong economy. Is that like if you're adding 80,000 jobs, if the unemployment rate is low, do you do does the economy need a helping hand? And helping hand is a large cut. So obviously it's not the only factor involved with it all. But if those numbers were weak, plus what other sort of situations are going on, in the economy and in the sort of world economy, that would sort of say, okay, yeah, maybe we're going to get a 50 base point cut. But I think sort of local data with the sort of unemployment rate and jobs added is still, well, it's still strong. So, you know what I mean? If it doesn't need the extra helping hand, I think the risks don't outweigh the reward, so to speak. Because remember, if you cut too much, if you cut a 50 base point in one go, supersized cut or whatever they call it now, you're going to have that feed through to like sort of levels of inflation and CPI. So I saw the other day and they put a cutesy thing on the news of, you know, the inflation dragon has been defeated or something like this, which I think they're going. It would be a nice one to sort of reference that in a little bit because I think that might prove to be incorrect in the coming months. But look, we'll see how it goes. But I'm sort of thinking more to a 25 base point cut. Aussie has not really sort of seemed to care or react to that at all. I mean, it's happening in 4 hours, and Aussie is up 60 points from its lows for the week. I mean, it's only Tuesday, but still, you know what I mean? It's very much sort of sitting around. So it's cooling off a little bit now, but that's probably more, again, because US dollar, the DXY, is actually started getting bought up off open this morning after being absolutely crushed yesterday. So US dollar got absolutely hammered. Mainly, it would seem through Europe's first chance to respond to the fact that they got downgraded by those Moodys people and lost their AAA sort of rating. That really sort of seemed to affect things quite difficult. You know, we saw through Asia and Europe that equity markets kind of sold off. Um, but again, it's kind of like these things that, you know, the first chance that Europe had to respond because it came out the very last section, I don't know, maybe even the last hour, but certainly the last couple of hours of US session last week on Friday, Saturday morning, local time here. But that means that you saw if you look at the equity markets, they all sold off, but of course Europe's already closed by that stage. You got the new week, Monday comes out, we go Asia, then Europe. It was Europe's first chance to respond to that, and as soon as they sort of got to the desks, they absolutely dumped the US dollar, and it got absolutely smacked down. Through Asia, they didn't seem to really sort of worry so much about it. Actually, grinded a little bit, sort of just sort of almost it dropped. Yeah, well, actually, they did. Sorry, I should say it gapped down, sold down, and then bounced a little bit, and then kind of grinded a bit, but nothing in compared to what we saw sort of through the US session, sorry, Europe session. But equity markets, as soon as the US came back up, poof, they bought back up. So I'll get into these in a moment. Anyway, RBA happening 230. That's a big one there. It's I think pretty much they'll sort of be on the money, 25 base point cut. The press conference is kind of going to be something that gives us a little bit more light. They are expecting, or it seems to be that people are expecting a bit more of a hawkish 25 base point cut. And this is what I was saying the other day that, you know, you've seen this a little bit more recently. It's been heavily telegraphed. The market is predicting this. It probably come out as it. You might get a little bit of a jump as the data comes out, as people will take positions for the base for in case it does do a 50, in case it does hold. Because if it holds or if it does a 50, that's where you'll see a bigger move. If it comes in line, you'll see a bit of a knee-jerk reaction, but it'll probably settle down till you get the press conference. And then if Bullet comes out sort of saying, hey, look, you know, we've cut today, but you know, we're not in any rush to cut, and this is something was going to be a wait and see attitude and see what the data says and all this kind of sort of more sort of hawkish kind of talk, then you may not see the impact of a 25 basis point cut be so heavy. So that's the thing. You can get a cut, but it could be a dovish cut or it can be a hawkish cut. So that's what the press conference will give us a little bit more of an idea about. Moving forward through that, that's obviously end of Asia anyway, coming through. Not anything really sort of through Euro sessions. And then CPI out of Canada looks to be pretty much flat over there. You know, they're not too bad at numbers, all in all. And that's pretty much it in terms of data, sort of moving through the rest of the session. So pretty much just eyes on RBA. All right, so let's get on to it. So we got the chart here, and as you can see, you know, Aussie's sort of selling off a little bit now. But I would say again, this is probably more for the fact of US dollars being bought up a little bit, sort of coming off open. So it did absolutely rip up here. So what time was this? This was 4 o'clock. So yeah, as soon as Asia finished yesterday, as you can see, it was struggling, and then it just bang exploded back up. And this is what I'm saying. So like from this support here, So from low of the day, oops, oh yeah, 1% from the low to high. So 67 points up there. So quite a bounce for it. Look, all in all, big picture is just still sitting along. I did say over the weekend that 90s was going to be the level that we were going to be sort of seeing as a strong support. As you can see, it really sort of a little bit of a sort of uh, gap down. You can, well, if you think that's where you close, that's where you open. Small little gap into the first hour, but not really much. And then Asia really just sort of grinded around. I think it dipped into the 90s, yeah, down to 90, 98, and then bang, that's where it sort of took off. So we are seeing it roll over a little bit now. This is just on the 1 hour. What's the 4 hour looking like? Yeah, 4 hours sort of just had a little sort of doji indecision up the top here, and now we're sort of taking out the lows there. So I wouldn't be surprised if we do see a little bit of cooling. Probably maybe back around this kind of 720, no, 720, 64.20s, where we're sort of seeing this has been a little bit of a sort of reoccurring level through here. So I wouldn't be surprised should we sort of get any sort of sell down. This is probably where you might see buyers try to sort of hold it. I don't expect us to come all the way back down over here prior to the thing, just based on how strong that move was and how much it really is just sort of disregarding this sort of RBA because US dollar got smashed down, so that was pointing it up, and this is the biggest driver that we're going to have. One is a little bit sort of flat, but it's starting to sort of move up through falling resistance, which I'll sort of get to a little bit there, and RBA should be pushing it down. So it doesn't have the three sort of ticks, in my opinion, to sort of be saying, hey, look, we're going to get a big breakout here. Should we get a hawkish cut, this could tip RBA around here. The reason that the RBA could sort of be ticked around like here, even though it is predicting more cuts, is because initially they had been sort of saying, look, we're going to have sort of 5 or 6 cuts through the end of the year. Going back, I think it was 5 or 6 weeks ago now. We had that sort of massive sell down, and everybody was panicking and everything. At that stage, they're like, wow, super cuts, all this kind of stuff, yada yada. 6 cuts. I think this has been wound back to about 3 cuts through the year. So obviously, sort of like, Aussie hasn't been moving much as is, but both ways it hasn't been moving up. So you should sort of think that, okay, well, if more cuts is going to sort of bring the price down, you know what I mean? You're going to be cutting 6 times, so let's not buy it because it's going to be limited on its upside because they're going to be cutting 6 times. Well, now that you've released half of that handbrake, it should be able to sort of push it back up a little bit. It hasn't moved either way. It hasn't moved up, hasn't moved down. It's really ultimately just flat. It's had a couple of tests up around that 65, but obviously, as you can see, it's been smacked a couple of times with all this here. So I think sort of, the reason it's sort of actually sort of reacted fairly well with it is like, it's one of those sort of things like when a company comes out with earnings and they're expecting bad earnings. They're bad, but they're not as bad as they thought they were going to be. It's actually seen as a positive because the market had priced for 6 cuts, say down here. Well, now we're getting 3 cuts. Okay, we're up here. This kind of thing. So that's a little bit of a sort of idea of it all. So in terms of the technicals, I think sort of look above sort of 65, above this sort of level over here, which obviously we had sort of marked out as an interesting level. It came just shy of it and then knocked back down there. We just ticked onto a new 4 hour. Should this sort of move back up above here? Look, we know that 65 is the round number. That's going to be a heavy level. That's your breakout level, really, because as you can see, even this period here got up to 65, unable to close above. Came here, just kissed it, and then sort of came down. So a close above 65, and it's on its way, and we can work at the larger levels. 65.50, I think, was the next level to the top side there. Now, if it's going to be knocked down and if it's going to sort of fail again, which we'll see what happens, mainly, as I said, driving on US dollar, I think you've got to really sort of get back down under the 64. Because you can see that, so obviously a couple of times tried to get down here through last week, unable to do so. Yesterday, barely spent half a second in there underneath 64 and flew up there. So it's really, I mean, this came up to just 65. This came to just 64. They're your two levels, but at least minimum an hourly close above one or the two of them. Look, we're getting a little bit overboard on the 4 hour. We're kind of sort of looking to roll over here. I wouldn't be surprised if we see a little bit of cooling. See what happens around sort of 64.20s. Underneath there, 64 round number, but major breaks underneath these two here. I'm going to take this off. We'll move this back here now because I think that this is really where you're looking at. These are your two levels up here. Not to say that you can't snag a couple of trades in between these. Certainly, if you close up above 70s, then you're looking for as a fair effort to go for a test at 65. But till you actually get a close above 65, I think you're still in the mercy of just having a repeat action of this kind of stuff here, and particularly if it drops short of it, if it only comes in down here, that's three lower highs as it is right now. So I think look, I've been saying that I think this thing is going to roll over, but every time buyers step back in very, very strong. Equity markets picked up a lot over overnight. US dollars actually selling off a little bit now. As 11 o'clock, we start to see a little bit more volume in. So yeah, look, we'll see how this session plays out. I'm not expecting a great deal, maybe a little bit of downside prior to the data. 25 base point cut, but then be looking to see what happens with the press conference. And I think sort of like really like it's all very well, but this is the main driver. If US dollar breaks 100, which it tested a main support, structural support, if that breaks, then I think this will push it up. But as I said, above 65 is where I think the market agrees. Onto gold. Gold is pretty much as expected for it all. We knew this was going to be a strong area. I called over the weekend that this felt a bit trappy. As you can see, so it came down 31.60. That was the level. Whoops. 31.60 was the level that I was very interested in. I've been aiming at for a while. It came down there, overshot it, and as I said, hit stops, trap shorts. That's what it did. Came back and normal sort of price action flow, 31.60. That's where it came in. Come the weekend, I said, look, if we get up into this top area, this is what I'm looking for. This kind of range through here. I mean, there's a couple of levels of interest. Obviously, sort of around the 40s. That was pretty much 40 to 50 is where we sort of saw markets start to sell it off on the bounce back down. Saw that on open yesterday, and then obviously sort of through sort of Europe and that as well. So really just kind of flat at the moment, a bit sideways, but still in this kind of flow down direction. So you might see little flares up. As I said, above 32.70, I think we could see some more upside. You close the gaps, maybe sort of come back up, falling resistance. If you get up above 32.70, I'll be looking for a move up towards 33.70 before trying to sort of really short this thing and sort of come in with this big falling resistance. But for now, I mean, it's just a little bit nothing. This is the quietest kind of you sort of seen gold for a while. It goes through these little periods of sideways action. But as you can see, it's teasing down, but then buyers step in. But certainly the buyers aren't going crazy like we've seen them through these periods over here. That's when they're going nuts and they're buying it up, and it's just unrelenting. So once that happens again, maybe above 32.70, we see some of that. Maybe we see some of these just constant buy, dip a little bit, buy, dip a little bit, moving up to that level over there. So certainly above 32.70, I don't really want to sort of stay on the short side till we can sort of get up to around that 33.70, and I think you've got a lot of better option of shorting it from up here. But as we're still in here, short term, above, oops, let's drag this out, above 50s, then I'd be putting it on notice to get up into the mid 60s, but I don't think this will break through straight away. I think sort of more likely we're probably just going to see maybe a little bit of a drift down. Did we gap yesterday? So we gapped up a little bit and pretty much closed the gap straight away before sort of taking off. But a little bit overbought, nothing really. I mean, it can obviously sort of roll up here a little bit more, could roll over. It's a bit of, I think it's really just taking a bit of a breather just for the time being. What do we hit? We hit 14 as a low. We got a $15 bounce off the lows in the last half hour or so, or 40 minutes. So, the buyers are still around, but they're reluctant to keep on buying. So, I think, maybe if you take out sort of 13, you look for a move back down to sort of maybe below 3,200. So for this body fill, so under 13 down to sort of, that's about a $30 trade down here. But for now, I think this is the area that you're going to be trading in. If you're short from down here, I think that's going to be stuck for a little bit till we see a proper move and it comes right down sub sort of 3,000. But the risk is with this, because you've trapped a few shorts down here, that they squeeze it up the top over here. We have seen it happen. It's almost a bit inverted head and shoulders, but I wouldn't be enough to, I'm not confident enough to sort of say that this is inverted head and shoulders. To me, it's more just trap the shorts, and now we're just going to see this pinball around in here. So while it's still in this area, I think it's very much chop and change. Just take the wins, the 5, the 10, the $20 moves. Which, I mean, a $20 move on gold could be great. But you know, if you get $5 or $10, maybe $10 or so, given how fast this thing tends to move at the moment, I think that's definitely the way to go till we sort of get a break and a close outside 31.40 or 32.70s. DXY flicking along. So as I said, this thing got absolutely demolished yesterday. So gap down. So just to unpack the whole sort of thing, that's when the little report came out in the last hour of trade on Friday or Saturday morning local. This thing sort of, as you can see, prior to that, it had a nice little pullback, little breakout, boom, boom. It was traveling quite well till last couple of hours. You're going to see a little bit of a cool off anyway, and then Moody's, we've downgraded it. Boom. Open Asia, gap down, boom. Tried to hold it, but as you can see, 4 o'clock came, London pre, and they just dumped the hell out of it and just went down. So a little bit of a gap up this morning. Looks like it might be closing this gap. Look, if this closes the gap and then takes out the high, I think we move back up because we were pushing back up. Everything was looking all in all not too bad. Yes, we had a couple of sell downs, but we had some big drivers moving up through there. The confidence was up, and it was looking a little bit better. But again, smacked on the nose, bang, bang, bang. Where it did come down, we can see that, you know, this is the largest structure where we can see buyers moving up. And you can see that, you know, this was the level that we said, look, this is where the buyers are, this is where they need to hold. That's exactly where it bounced from. Previous levels of resistance, support here, just enough to sort of take out the very lows. If someone was so inclined to be sort of a little bit textbook stop kind of thing, goes one pip underneath. But yeah, it goes down here and then sort of bang, bounces back up. So, you know, the overall larger time frame is not intact as of this moment. I think underneath 100, which I've been saying, I think it's looking a little bit worse for wear. But till it gets underneath 100, it's still, you can see the buyers are moving up and they're holding and they're holding. I mean, this isn't really too much. I mean, we've seen a bunch of times these little internal structures fail. And that's what we saw here. Buyers are here, came back, tested. They moved up and then bang through Asia, through Europe. Started Europe yesterday, failed, bang, came all the way back down here. So yeah, a little bit of a push up to start the session, sold straight into. That's fine. We'll see what happens when it closes the gap. If it does come back down here sooner rather than later, the higher likelihood is that we break through. Because as I said yesterday, if it takes you a while to get back to these things, it's not going to break through. It needs that double tap at minimum, if not more, in close succession to sort of break through. So we'll see what happens. About to close the gap. If we see a rejection from there and it moves back up and takes out the highs, then I imagine this to sort of move up through the rest of the session. It does have that gap from yesterday that it will close at some stage. Generally, if it doesn't close it in that session straight away, it'll close it later in the session. If not later in the session, it can stay for a little while. So we'll see how we go with this. But yeah, so we'll see what happens should it come back down to this little smaller zone just here. A little alert under that. I'll call it main supports. Should we take out this little low here? Because structurally high resistance support. We took out this one, so it should sort of see some sort of follow through for a continuation, but sellers a step back in. So as long as you can hold this little 132, whatever, 100.32, you should be okay to sort of see this thing move back up through the rest of the session. If it does take out this level here, then I probably think we're coming back down to test this 100, which is our main sort of level. So we'll see how difficult or how much that Moody's downgrade has had an impact on it all. So it's just some of these things. It's like, I mean, it's already on its knees. It needs strong data. It's not showing a lot of confidence in things going on in the US. So, but you know, you should sort of think that if this is selling off, equities actually sort of bounced right back yesterday. Um, you would have thought maybe gold would have been the place to go, but as I just saw a second ago, gold's not really doing much based off this as well. So, I guess you know, even though sort of supposedly confidence is shook from that downgrade, um, they're not looking. I mean, it's supposed to be a risk off kind of thing. But gold didn't pump, and equities did rocket up, and obviously Aussie sort of finally sort of went in line with that as well. But as you can see, you know, we'll see what happens. It just needs to stay above this zone here. Take out the high, then I think we look for a continuation through the rest of the session. Um, Move along. We got silver. Silver. I've had a couple of stabs at this. And yeah, I mean, I stick to my style of trading, and like, you know, I can't remember what moves it was. Maybe this move down here and a couple through here or something. Um, I could only imagine people that sort of buy and they're like, oh, I move my stop and I do this kind of thing. You just be going nuts. It's just not doing anything. Around the 50s, you can see the 50s, 60s and that the sellers come in. You know, you got a high, a low. You got a little bit of a triangle actually, almost sort of forming through here at the moment. But there's not a real lot to take away from this. I still think we're moving to the downside. I just think it's really sucking out everything it can at the moment. It didn't really move a great deal yesterday with where we at Monday. So yeah, actually it did. It moved up a little bit with that sort of weakness, but as you can see, there was no follow through. So yeah, a little bit of a sort of triangle forming here. I think a little bit of a support under here. Oops. A little bit of a support under here, which might sort of give us a bit of a trade actually. Yeah, I think sort of maybe a close under 24. You've got this sort of rising support coming through here, but I would say probably more likely you're coming down, test underneath 32 again under here. But certainly this is just a headache and a half. I've done okay on this actually, to tell you the truth, just because I've, you know what I mean? What you need to do with your style is either you sort of buy and hold and you do it with absolutely every single one. And, you know, you get stopped out 9 out of 10 times. But, you know, that 10th time generally will kind of, hopefully, if you can ride it, you'll pay for the other 9 stop outs. And, you know, overall you can do okay. Um, but the things you can't chop and change. If you do that and then all of a sudden you go, no, I'm just going to take profits. Well, you've taken all these hits, stopped out for nothing, taken losses, whatever. The trades haven't worked out. And then that's the one that runs. Or vice versa, you take little ones, little ones, little ones, and then, you know what I mean, when it does run, well, you miss that. That's fine. But you know, whatever style you do, you just got to stick at it religiously, in my opinion. But this looks, again, very snooze-like. So we haven't got much data coming out this week, so I'm not 100% sure what it's really sort of waiting on. We are sort of obviously, as I said, sort of seeing this, waiting to see what's the US dollar going to do. I think this is probably what's really going to give us this direction because US dollar's been trying to break out, and it's obviously been capping this market here a little bit as well. So if it does break out, silver will come down. If we fail, and as I said, 100 is the early indicator with the US dollar, a DXY, that's going to put a little bit upside pressure on the market. But I'm still in the camp that we're moving down here. But for now, it's back onto the shelf for me. Copper, yeah, not really doing much at all. It's putting in little lower lows each time just to sort of screw people and then fires back up, fires back up. But again, it's a range inside a range. It's not really producing anything. Same sort of deal. I think it's just waiting to see what happens with the US dollar. If that sort of rolls over and takes out the lows and breaks that 100, I think that could open it up to have a shot out of the top side here. But yeah, a close above 4.8, I think is what will give you an upside clarification. I move back down here. I imagine it'll find buys again. It's been a while. It's been sort of consolidating through here, but really just sort of sideways. And then sort of onto China. These charts at the end of the analysis, after you do gold and DXY and Aussie, they're kind of getting a little bit flat. This is one that I do think will push up a little bit, and I think this is an important chart given the other ones that we've been looking at, because we've got a little bit of a sort of medium-term falling resistance. It's broken through now. Bigger one is this horizontal, which we've sort of been looking at for months and months and months and months. It's broken, it's rejected, it's got tried to tease back in, got gapped and sold down. Really still just sort of sideways. But through this sort of little falling, immediate falling resistance, I think opens it up, at least to sort of possibly close the gap or come up and test the top side over here. So these are still the little levels that I'm looking for. Which is sort of like 725 and then 728 above that, like this. I think through this falling medium resistance here means that we could see a little bit of a push up, and sort of at least sort of continue this this kind of sort of bigger part of the range. It's been very tight down the bottom here, but the thing is, it's had a lot of times to try and break it down. Like if it was going to take it down underneath here, retest, bang, that was the time. Failed, move back in, okay, bit more force, bang, came down. And then as you can see with these ones here, we're seeing higher lows come into this area here. I'm expecting this to sort of drift up to the top side here, which I think is going to put pressure on Aussie and put pressure on gold as well. Not necessarily to the point that it can't do it, but they can't break out. But I think it will sort of slow their progress a little bit. Just seeing DXY just on that come down into that support area now as well. So we get onto a lower time frame, you can see this. So coming down quite substantially here. We've got a little bit of volume sort of coming in, a little bit more volume coming in is about 10 minutes or so. So we'll see what happens with that. But certainly at the moment, it looks like they've tried to run it up early and then smacked it down. We did have another session, I can't remember, where was it? Was it around here? Maybe this was the other week in that where it sort of gapped up and looked like it was running, and then they bang sold into it. So Asia certainly seems to be the time in which they like to sell US dollar down. I mean, obviously yesterday we had the gap, and then as I said, it was a bit quiet, and Euro was where we saw the strong sell, but this thing is not looking particularly healthy here at the moment. So as I said, I think through this level here, first thing we come back down, test 100, but that's going to be the main level. If that breaks, I think we could see a couple of these things start to move a bit quickly, because that is the larger sort of structure. As soon as you start putting this down here, well, you're kind of looking back to where you'd seen the buyers, and you could see that coming back down, test low 99s. A lot of chop through this area, so I probably won't go in one go, but should it break 100, I'll probably be looking around 90, low 99s, I'd say. Alternatively, is it holds this little support here, but we'll see how that goes. All right, that's it from me.